Hello students, welcome to AffairsCloud. My name is Shashmita. We have an app by the name CareersCloud which you can go and download through the Play Store. Once you have downloaded the application, you will easily be able to log in using your Gmail ID. And once you have logged in, you will be redirected to this page where you will be getting this URL. And there will be option for home, all courses, my courses and doubt section in this application. You will be getting multiple PDFs, multiple content on daily basis that will be enhancing your learning. Under Crack Current Affairs, you will be able to see multiple options. First one is Current Affairs English. We upload the day-to-day basis news in the English format. And apart from English PDF, we also provide them in Hindi format. And this banking awareness, we upload a PDF every month. So this PDF will contain the banking news, banking and the finance news of that respective month. And Current Affairs Exam PDF will have two categories. One is that most important news of that particular month will be uploaded in this Current Affairs Exam PDF. And also Exam Perspective PDF will also be uploaded. And next is Special CA. This will contain Union Budget, Economic Survey, and also the most important events that had taken place globally as well as nationally. And next most important is topic wise. So the entire news of that particular month will be segregated into different topics. And in order to recollect whatever you've read, we also provide you with topic wise quizzes. Apart from that, we also provide state current affairs. Now, here if you see, we provide you with the day-to-day PDF, and this we provide you with the weekly PDF. So that particular week news will be compiled into a PDF and in question and answer format in English and will be uploaded here. And to enhance your learning, you can also, to enhance and strengthen your learning, you can also attend the quiz. Here we provide you with the entire news of that particular week. But here we take the top 60 most important news and we upload it in this PDF in question and answer format. Apart from weekly, we also provide you the monthly ones. This PDF will contain detailed view of that particular month news, and this will have a brief format of the same news. This will be in the form of a question and answer format, and this will have the top 100 question and answer of that particular month. We also provide you with the PIB news on a day-to-day basis, which you can go and read in these particular tabs. Apart from that, we also provide the Union Budget and Economic Survey. You can also attend you can read after reading the PDF. You can also go and attend the quiz. This is available under Special CA category. We also provide state level current affairs. So this will be very helpful for students who are preparing for state level exams. For example, if you are preparing for Tamil Nadu state level exams, then you can click this tab and you will be able to see all the current affairs or news related to Tamil Nadu. Apart from that, we also provide PDF from the exam perspective. Suppose you are preparing for RBI assistant mains, then this tab will contain 5 to 6 months of current affairs, which has high probability of being asked in RBI assistant mains. Similarly for SBI PO, RRB PO, clerk mains, all these are being given under this section. And also we provide separate content-wise, topic-wise current affairs like national affairs, government schemes, international affairs, banking and finance, economy and businesses, MOUs and committees and meetings. All these different types of news are segregated in these particular categories. Hello students, welcome to our new initiative. In this initiative, we will be uploading the weekly current affairs on banking and finance section. So this will be uploaded on every Monday. And so on the whole, per month, you will have totally 4 videos related to this topic. And apart from just providing you with the banking and finance news, we also provide you the conceptual explanation so that this will enhance and also strengthen your knowledge about these topics. Hello students, this video is about the banking and finance news of April 1st week. Well, let's move on to the first news. The first news about the fiscal deficit, which has widened to 15 lakh crore in this period. So, this data is being released by the Controller General of Accounts, which works under the Department of Expenditure, which is in Ministry of Finance. It has stated that the fiscal deficit up to February 2024 is 15 lakh crore. And previously up to January, it was just 11 lakh crore. Now let us compare it with the previous year. Previous year, it was 14.53 lakh crore, which was 82.8% of the revised estimates. Now this year's fiscal deficit estimate was 17.35 lakh crore. And we have achieved around 86.5% of revised estimates. Now, in the start of this financial year, it was actually planned or it was estimated that we would achieve 5.9% of fiscal deficit. But now, in the interim budget, the finance minister has announced that it will narrow the fiscal deficit by 10 basis points to 5.8%, which is a very confident note. And it also aims to reduce the fiscal deficit to 5.1% by financial year 25. Now, if you see from Jan to Feb, there were around 4 lakh crore increase in the fiscal deficit. The main reason was the tax devolution. Now, what is this tax devolution? It is nothing but the distribution of the tax revenue between the central government and the state government. See, Say the central government has received around 100 rupees as its tax revenue. As per the 15th Commission recommendation, it shares 41% of its income. So which means it gives the state government 41 rupees. Now, how do we know that how much amount does this state gets out of this 41? How much amount does this state gets out of 41? So there is a formula for that. The formula contains demographic dividend and then the population of the state and also the forest cover, how much greenery is there. All this is included in the formula. So based on all these details, a formula is calculated and based on the formula, each state gets its revenue. Now, how much amount has been released towards this? Around 71,000 crore plus 1.42 lakh crore. So, which means around 2.1 lakh crore has been released for this purpose. So, if you see, up to February 2024, the receipt for this year is 22.45 lakh crore. But the expenditure is 37.47 lakh crore. So, from this you can understand the physical deficit meaning. So, what does physical deficit mean? It is expenditure minus receipts. So, by calculating this, you will know that how much money you should borrow in order to cover the deficit revenue. Since the expenditure is more than the revenue, so you have to borrow from the market or from the international organization to meet the expenses. So, for this purpose, the physical deficit is calculated. Now, the capex is currently at 8.05 lakh crore and the estimate is to spend 10 lakh crore for this year. Now, what is capex? There are two kinds of expenditure. One is capital expenditure, one is revenue expenditure. Capital expenditure, it creates infrastructure. It creates resources that brings earnings to the country. But revenue are recurring expenditure. Like if you see salaries, rents, all these are recurring. It does not give anything in return. You have to spend your recurring expenditure every month. So this is called as revenue expenditure. And so for this capex, it is now as 8.05 lakh crore and we are aiming to spend 10 lakh crore this financial year. Now, net tax revenue is now 18.5 lakh crore. So what is net tax revenue? Tax revenue, you know, the income tax, the corporation tax, the corporate tax, all this comes under tax revenue. So net tax revenue is when they minus the administration overhead process, administration or overhead cost. That gives you the net tax revenue. So net tax revenue is at 18.5 lakh crore. Now, non-tax revenue is at 3.6 lakh crore. The non-tax revenue, it includes the interest. Suppose you have given loan to any state government or any other government from other countries, then they will give you an interest in turn, right? So that comes under non-tax revenue. Then the fine, the fees. So all these comes under non-tax revenue and this is at 3.6 lakh crore. So the fiscal deficit for 23 is 17.5 lakh crore and for 2024 they are aiming to close at 17.35 lakh crore. Now, a new MD and CEO has been appointed for the Bank of Maharashtra and his name is Nidhu Saxena. He has replaced A.S. Rajiv and his previous stints were Bank of Baroda, United Commercial Bank and Union Bank of India. Now, Bank of Maharashtra is headquartered in Pune. The establishment was as 1935. And the tagline is Ek Parivar, Ek Bank, which means one family, one bank. Now, Sebi has launched beta version of T+0 trade settlement. Now, so what is this T+0? What is the Sebi settlement? We'll learn. Now, currently in the market, what takes place is T+1 settlement. Say, assume that A has a share Tata which is worth 1000 rupees. Now, B wants to buy it. So, he is also okay with selling it. So, it sells the share and in return, it gets the money. But what happens that today, I sell the share. But I would receive 800 only today. The rest 200, I will receive the next day. Similarly, B will get the share the next day, that is T+1 day, into its Demat account. What is Demat account? It is just like any bank account. In bank account, you store your money. In Demat account, it stores the electronic version of your shares. So this is the difference between demat account and bank account. So in T+1 settlement, the seller receives only 80% of his cash and receives the 20% on the next day. But in T+0 that the Sebi is planning, it is planning that A gets its 1000 rupees the very same day and B gets its share credited to its demat account the very same day. This is the planning of T+0 settlement. So if you see, in the T+0 segment, prices can vary within a range of 100 basis points. 100 basis point means 1% up or down compared to the T+1 market price. So this range will be adjusted every time the T+1 market moves by 50 basis points. So 50 basis point, 0.5%. If there is any 0.5% moving up or down in the T+1 market, similarly 100 basis point will be varying in T+0 market. Now, Sebi is planning to introduce this in two phases. The first phase is for trades until 1:30 p.m. So for trades that happen until 1:30 p.m., this will be settled at 4:30 p.m. And the second phase is for trades from 1:30 to 3:30, which will be settled at 4:30. So once the phase 2 is implemented, that is the phase 2 is nothing but the instant settlement is implemented, the phase 1 will be discontinued. So for this beta version of T+0 settlement, around 25 scripts. 25 scripts in the meaning that 25 stocks are selected and there is a limited number of brokers for this also. So this allows the same day settlement of stock trades instead of 1 day settlement of T+1. So what is the use of this? It ensures that cost and time efficiency and also transparency in charges to the investors, and also it strengthens the risk management at the clearing corporation. So this is not the first time that Sebi is venturing into these kind. This has happened previously also. In 2002, the settlement time was 10 plus 5. And 2003, it has progressed to 10 plus 2. And 2023, it has progressed to 10 plus 1. And now it is aiming to progress to 10 plus 0, which is very huge. So these are the 25 stocks that will be for beta version testing. Ambuja Cement, Ashok Leyland, Bajaj, Bank of Baroda, BPCL. So all these are the 25 stocks. Now, what are the benefits for the investors? Increased liquidity. Suppose if A is going to get 1000 rupees immediately rather than 800, obviously he is going to be very happy, right? So with this, he can buy another shares of whatever wishes he wants. So this is one very, very important point. Next is improved flexibility. They can react promptly to the market changes, and they can also use the funds for the same day transaction. So previous day, they used to get the 200 rupees that previous day only, 10 plus 1 day. So they can use this 200 only the next day. But now you get this 1000 rupees immediately. So you can use this fund immediately also, the very same day. Reduce risk. See, so A has sold its share to B, but it has received only 800, but the share worth is 1000 rupees. So would A be worried, oh my god, will I get my 200 next day or not? Or will B default? So all this counterparty risk is reduced or completely eliminated in this T+0 settlement. So first, Sebi will evaluate this for 3 months and also for 6 months and then decide on further rollout. Now, the chairperson of Sebi is Madhavi Purivuch. It is headquartered in Mumbai and it was established in 1992. The next news is, as per RBI data, credit cards surpassed the 100 million mark in India. Now, we all know that there are two types of cards. One is credit card and another is debit card. Now, this debit card is linked to our bank account. So, we can spend as much as we have in the bank account. Suppose we have 1000 rupees, then we can spend about up to 1000 rupees using this debit card. But this credit card does not work similarly. Now, this credit card has a pre-sanction limit. This limit is set by the company depending upon our salary or savings or the FTs that we hold. Depending upon that, we get a pre-sanction limit. It varies depending from person to person. Can be 50,000 or 5 lakhs. So up to this limit, you can spend. And you can spend it for about 30 days or 45 days interest free. And if you don't repay it between 30 days or 45 days, then the interest will be adding on your outstanding. So this is how the credit card and debit card work. Now, the data revealed that in February 2024, the total number of credit cards in circulation was 100 million, whereas in February 2023, it was 99.5 million. So, first time it has crossed the 100 million mark. The largest private bank, HDFC, it leads in the number of credit card issuance in India, and there are around 20 million credit cards in circulation, which is followed by SBI with 18.75 million credit cards, ICICI with 16.84 million credit cards, and then Axis Bank with 13.9 million credit cards. Now, credit card spending has decreased, though the number has increased, but the spending has decreased from 1.66 trillion to 1.49 trillion. It is due to the significant decline in the point of sale and e-commerce payment. Now, what is point of sale? You have seen this in a lot of places. Like if you go to a hotel or textiles or any shops, you'll see a machine, swiping machine, right? You can swipe your card and now you can even tap and pay. So this is a point of sale machine. And there is also another type of digital point of sale. So you've seen this QR code. This is a digital point of sale. And e-commerce payments are nothing but Amazon, Flipkart. All these are e-commerce. So there has been reduction in spending in these two places, and because of that the credit card spending has also decreased. Moving to the next news. It states that PFRDA has mandated two-factor Aadhaar authentication for the CRA access. What is PFRDA? It is the Pension Fund Regulatory and Development Authority. It maintains the national payment system, that is national pension system. Sorry. What is this? It has been implemented in 2004. So from 2004 onwards, it has mandated that central government, it has to contribute to this NPS for its pension. After that, after the central government people, they retire, they get that pension from this only. So this is mandated for them initially, and later now it is available to all public. So if you want to, if any person, he wants to go and see, okay, how much amount has been accumulated till now, what is the contribution I have made, what is the interest that I have received, for all this it can log in NPS and it can view. For that it requires PRAN, that is permanent retirement account number, and a password. Using that you can go to the website and log in, and then you can see its NPS account. That is how it was working up till now. But now it has added another security layer in order to reduce unauthorized access. This is Aadhaar based login. So an OTP will be sent to your Aadhaar registered phone number. So first you will log in using your PRAN and password, and then you will provide this OTP, and then you can go and view the NPS account. So currently the asset under management, that is in NPS, is 11.56 lakh crore. Who is the chairperson of NPS? It is Deepak Mohanty. Who is the chairperson of PFRDA? It is Deepak Mohanty, and it is headquartered at New Delhi and is established at 2003 year it was established. Now, IRDA has mandated e-insurance for all new policies. We have been seeing IRDA for quite the past few weeks. We have also seen that IRDA is moving towards complete cashless payment. So now if you see in the country, they are both cashless and cash payment. In cash payment, you first pay, the customer first pays the amount and then gets reimbursed from the insurance. So IRDA is moving towards cashless payment, and it was also instructed to include Ayush under the insurance ambit. So previously Ayush medical charges were not be able to reimbursed. Now they have been planning to include Ayush also under the insurance coverage. And now another one is Bima Sugam. We learned about this in the previous week. So this is an online e-marketplace, online place where the entire one-stop solution for all the insurers. You can renew your payments, you can renew your policies. You can also raise if you have any grievances, the customers can raise during using this portal. So this is the purpose of Bima Sugam portal. So now what is the news now? Now IRDA has mandated that all insurance policies should be issued in electronic format from 1st April 2024. So what is this e-insurance? It is the process of acquiring and managing insurance policies electronically. So where are these e-insurance stored? It is stored in the e-insurance account. So each person will get an e-insurance account. In that, e-insurance policies will be stored. This e-insurance was introduced in 2013. At present, there are 4 insurance repositories. They are CAMS, Carby Insurance Repository, NSDL Database Management, and Central Insurance Repository. The insurer, he himself will help you in opening an e-insurance account, and if you have an existing physical policies, then that can be converted easily into digital at no cost. Now, IRDA, it has also created an industry service iTrex. What is this iTrex? See, as per this, one person can have only one e-insurance account. In this one e-insurance account, he can have any number of insurance policies in the e-format, that is electronic format. But he should have only one e-insurance account. So this is what this industry service iTrex does. It ensures that there is no duplication of e-insurance accounts across various insurance repositories. So, the chairperson of IRDA is Debashish Panda. It is headquartered at Hyderabad and established at the year 1999. Next news is RBI has stated that reserve assets has surged by 34 billion and the net claim of NRA has declined by 12 billion. Now, as per the latest data released by RBI, India's international investment position as of December 2023 showed a decline in the net claim of NRA on India by 12.2 billion during the period October to December to 360 billion. So the net claim of NRA on India is around 370 billion as of December 2023. Now what does this international investment position indicate? It is nothing but the difference between what the NRIs hold, what assets they hold, financial assets or normal assets they hold in India versus what assets our resident individuals, that is the people who reside in India, hold in foreign, that is in abroad. So these details are specified in international investment position. So it has stated that there has been main reason for the decline in the increase in reserve assets is due to exponential increase in the financial assets of overseas. That is, the financial assets that the reserve, that is resident individuals hold in foreign, it has increased by 40 billion. But the assets that are held by NRI in India, it has decreased only by 28.5 billion. So the increase for us, for resident individuals in foreign, is more. So if you see this difference, it is around 12 billion. And this is this data. So I hope you understand. So the increase in reserve assets, which account for around 85% of increase in foreign assets. So reserve assets have mainly increased because the foreign assets held by Indian residents have increased. Now, what is this reserve assets? Reserve assets are nothing but currencies or other assets such as gold that can be readily transferable and used for international payment transactions. So the primary type of reserve assets include gold, foreign currencies, special drawing rights, and reserve position. Now, what is the special drawing rights? It is issued by IMF. It is only issued to the IMF members. It is an international asset. It can be easily converted to any currency and can be used for any international transaction, for import, export. For all these purposes, this special drawing rights can be used. Now, the reserve assets account for 63.9% of India's international financial assets. And as per RBI data, the financial asset to financial liability, it has increased from 70% to 72.4%. So it's very good news that our financial assets have also been increasing. The next banking news is that RBI has set up a Digital India Trust Agency to check the illegal lending apps. Okay. Now, generally in a traditional banking scenario, if a customer needs a loan, then he takes the required papers like KYC, his salary, etc., etc. He takes this and he produces it in the bank branch where he has his savings account, and then in turn the bank all checks its KYC, its salary, it verifies everything and then produce a loan to the customer. But now you can get a loan without even visiting the branch. So how is that possible? So for example, if you have, if in case you are a customer of SBI, then you have an app called Yono app. You can log in, you're using your Yono app, and if you are eligible for any loan, personal loan, then it will show an eligibility that you are eligible for so and so loan, 5 lakhs loan, this much of interest rate. You can avail it if you are interested. And apart from even the bank prescribed apps, you also have third party apps like GPay. Even if you log in GPay, it also tells like you can avail 8 lakhs loan for so and so interest for so many years. So we are living now in a digital era. So digital innovation is increasing heavily. You have to balance it by looking after its risk. It has its own rewards as well as its own risk. The main risk is cyber fraud. So in order to reduce this agency has been introduced. Now, the Reserve Bank of India will establish a Digital India Trust Agency to combat the proliferation of illegal lending apps. Okay, there's so many illegal lending apps that you can see in the Play Store of Google. They also offer you loans, but they can be frauds. They may tell you that we are charging only 10%, but at the end they might charge you 15%. So all these unrecognized charges can also be posted on your loan. So these illegal lending apps should be removed from the Play Store. For this purpose, this Digital India Trust Agency has been introduced by the Reserve Bank of India. So it's a crucial checkpoint to tackle the issue of illegal lending apps. Apps lacking that verified mark from the Digita would be deemed unauthorized. So if it doesn't have a verified mark from the Digital India Trust Agency, then it is considered as an unauthorized one. So the agency aims to vet digital lending apps for compliance, and it also maintains a public register. It will maintain a public register of all the verified apps. So the Google will now enforce a policy which will allow only the RBI regulated entities or their partners to publish apps on the Play Store. So this policy will be enforced so that no illegal lending apps are published on the Play Store. Additionally, actions have also been taken to rescue citizens who are involved in the cyber fraud activities. So people are okay, fine. Prevention is better than cure. But what if you are already been a victim? So for that also the actions are being taken to rescue them who are involved in the cyber fraud activities. Next, Sebi launches SCOR 2.0 to strengthen the complaint redressal system. Now, what is SCORS? So SCORS is nothing but a online platform. It is designed to help the complaints that has been launched by the customers, which is pertaining to the security markets. That is the secondary market where you trade your shares, you buy your shares, you sell your shares. This is called as security markets. And online with Sebi against the companies, the listed companies and Sebi registered intermediaries. What are these intermediaries? It includes brokers, stock brokers, and also it includes the clearing participants. It also includes the depositories, where the shares are stored. So all these combinedly called as intermediaries. So if you want to raise a complaint against the listed companies or registered intermediaries, then you can raise it in this online platform called Sebi Complaint Redressal System. So all complaints received by the Sebi against them are dealt through this SCORS platform. What is the news about this? Now, it has recently launched the new version, SCORS 2.0. This will enhance the investor complaint resolution by auto routing and auto escalation. So previously manual intervention was required, and due to which the complaints or the solution, it used to take a lot of time. So in order to reduce the timeline, this auto routing and auto escalation is introduced in SCORS 2.0. So it is an online investment where the investors in security markets can lodge their complaints either through the website or through an app. So it has also established a timeline so that strict timeline is followed and the customers' grievances are addressed on the specific timeline. So the timeline is 21 calendar days from the compliant receipt. So there are two level review process. Suppose in the first level, if the customer is not satisfied, then the SEBI intervenes at the second level due to the dissatisfaction. And also there is an integration with the KYC. KYC is nothing but the Know Your Customer registration agencies. The next news is World Bank projects Indian economy to grow at 7.5% in 2024 and the EAP is projected to ease to 4.5%. Now, as per the report named South Asia Development Update April 2024 Jobs for Resilience, this report is released by World Bank. It has stated that India's economy is projected to grow at 7.5% in 2024. So previously, the previous estimate was released in 2023 and at that point of time, World Bank had predicted that India would grow at 6.3%. But now looking at the recent growth rate, it has revised its rate by 1.2% to 7.5%. So it is saying that India will now grow at 7.5% in 2024. South Asia is projected to maintain its status as the fastest growing emerging market and developing economy globally for the next 2 years. And the growth is expected at 6.1% in 2025. So the growth in South Asia is expected to be robust at 6%. So in 2025 it is expected to grow at 6.1% and 2024 it is expected to grow at 6%. So main reason is that the strong performance by the Indian economy and also the recovery seen in Pakistan and Sri Lanka. We know that Pakistan and Sri Lanka had a worst economic crisis during the last year due to the flood and also due to it was not able to service a lot of debt. So and also political issues were seen in Sri Lanka. So now they had received bailouts from the IMF and now we can see the recovery, strong recovery in both these countries. So all these three are helping in the growth in South Asia. So India's economic activity in the fourth quarter, it has exceeded the expectation and the growth was 8.5%, which is enormous compared to the previous year. And it was mainly due to increased investment and government consumption. These two were the main reasons for the 8.4% growth. Now, despite all this growth, there was a decrease in the FDI. That is foreign direct investment as a share of GDP in 2023. But this was compensated with foreign portfolio investment, that is FPI. And so this has led to an increase of 8% in the foreign reserves. So what is FDI? What is FPI? FPI is long-term investment, but this is short-term. They invest in the manufacturing company. They invest for the entire policy change. They create jobs. So this helps in the GDP growth. But here, FPI, they basically invest in financial assets like stocks, bonds. So they don't help in job creation. They don't help much in GDP creation. So FDI is always more preferred than FPI because FPI is for long-term basis and FPI is short-term basis. And here FDI looks at like fundamentals of the company and all. But here FPI looks only at the profit and the bottom sales line. And the bottom sales and the profit. Only these two figures are mainly seen. Now, do you know what are the South Asia countries? There are totally 8 South Asian countries. They are Afghanistan, Pakistan, Maldives, India, Sri Lanka, Nepal, Bangladesh and Bhutan. Now, there has been a very good domestic credit growth seen in India and it is 14% year on year in December 2023. So compared to December 2022, we have grown 14% and this has also been a healthy and organic growth as the NPA, that is the net non-performing asset has been, non-performing asset. It has been 3.2% as of September 2023. East Asia and Pacific growth is projected to ease to 4.5% in 2024 and 5.1% from 5.1% in 2023. Now, the World Bank recently released report named East Asia and Pacific April 2024 Economic Update has mentioned that the growth is expected to ease to 4.5% in 2024 from 5.1% in 2023. So, and while developing EEPay, excluding China, so China is excluded from this, it is expected to pick up 4.6% from 4.4%. So, China is projected to grow to moderate because due to the factors like high debt, a weak property sector and trade frictions. So, you've seen that many companies, international Western companies, they are trying to shift their manufacturing base from China to some other countries. So if you see, like recently Apple has based in India. So many other countries are also finding to try establish a base outside China or shift from China to other countries. So these type of issues are causing the China's growth will be moderate. And also Pacific Island countries are anticipated to experience a slowdown in the growth, especially Fiji. The next banking current news is UPI transactions volume increased by 56% in the second half of 2023. The main reason or the credit for digital penetration in India goes to UPI. It is a game changer technology. User friendly and convenience are the main reason for its success. Recently, the Worldline India Digital Payment Report for the second half 2023 was released. Now, as per this data, UPI transaction volume in H2 2022 was 42 billion and H2 2023 was 65 billion. There was an increase of 56%, which is very huge. And in case of value, it has increased from 69 lakh crore to 99 lakh crore, showing 44% increase. The average ticket size, that is the average transaction that an individual perform is, it has reduced from 1648 to 1515. So the reduction percentage is about 8%. And the P2P, that is person to person, like when you send a money from your phone to your mother, so that is considered as P2P. So P2P transaction, it has increased from 2649 to 2745, a margin of 4%. And P2M is person to merchant. So when you go and buy anything from any shop and you pay to the merchant, right? So that is comes under the category P2M. So that has reduced from 720 to 656. So around minus 9%. Now, payment acceptance infrastructure. So it has grew. POS, Bharat QR, UPI, everything has grown by these many numbers. Now, what is payment acceptance infrastructure? So, when you go to a shop, you buy some clothes. Then you can make the payment either by credit or debit card or UPI or even cash. So, if you're using credit or debit card, then you will have a POS, so mission. So here you can swipe your card or you can even tap and pay for the transaction. Similarly, UPI, you have QR code or you have the virtual address using which you can transfer the money. So these applications help in the convenience of the customers. Now, in order to enhance this further, in order to deploy this POS in almost all with all merchants, in 2021, RBI established a fund called Payment Infrastructure Development Fund. This is to encourage the merchants to buy POS, physical POS or digital POS, either of it. You can even buy both. So this was established by RBI. So RBI had initially contributed around 250 crores for this corpus. Apart from that, even card networks and card distributors, they also contribute annually to this fund. So if a merchant, how does it actually work? If a merchant, if he wants to buy a physical POS or digital POS, he goes and buys it from the shop and then he can reimburse this. After purchase, he can reimburse this after fulfilling certain criteria, like he has to use this on a regular basis for these many number of days, these many transactions should be performed. Then he can successfully go and reimburse the amount. So this is an encouragement, this is a push from the RBI in order to deploy the POS in almost every merchant place. So the POS has grown by 26%. It is now stands at 8.56 million. Bar QR has grown by 32. Now it is 5.96 million, and UPI QR has grown by 57% and now it stands at 317 million. Now, UPI transaction and volume. So if you see, Phonepay, Google Pay and Paytm alone constitute around 95.4% of the UPI transaction in terms of volume. Similarly, in terms of value, the same Phonepay, GPay and Paytm constitute around 93%. Now, let's come to credit card, debit card and prepaid cards. The value of card transaction, it has grown by 13% from H2 2022. And the value of credit card has grown 11% to 9.39 lakh crore. Debit card has actually reduced by 16% to 3.02 lakh crore. Value of PPI, that is prepaid instruments, it has also decreased by 30% to 24,100 crore. So what is this PPI? It is nothing but you can load your money in the PPI. The customer, like say NRI or foreigner comes, he can buy a PPI in his name, he can load the money and then he can use it in different outlets. If you have full KYC provided, then you can load up to maximum of 2 lakhs for full KYC and it can be used in different outlets. So this is the purpose of PPI. So this has reduced by 30%. The total number of cards has increased by 6%, but the volume of card transactions has decreased by 7%. Now, mobile transactions. One of the very easy and most convenient is mobile transaction because almost every person has a mobile. So mobile transaction is very convenient to all the customers. The volume of online transactions via mobile phone apps has increased by 28% to 62.95 billion from 45.58 billion. And as of 2033 December, the number of RFID, that is radio frequency identification tags, issued grew by 45% from 55.94 million to 82. Now, as per the report, e-commerce, gaming, utilities, government and financial services, they account for nearly 80% of the total online transactions. So these all services, they account for 80% of the total online transactions. Moving to the next news. Now, Canara Bank has launched a few loan products in order to meet the hospitalization expenses of their customers. So let's see them. The details of the new products. First is that suppose you have an insurance of 4 lakhs, but the treatment has costed you 8 lakhs. And if you don't have the remaining 4 lakhs, you can avail a product named Canara Heal. So it is to cover your hospitalization expenses beyond your insurance limit and is also available at a competitive interest rates. Apart from this, there is also Canara Angel product mainly designed for women with unique features like cancer care policy. And also you can apply pre-approved personal loans via Canara Ready Cash. And also Canara My Money is available to avail loan against term deposit. Apart from that, there is also another product called Canara UPI 123 Pay, which is very user-friendly payment interface introduced by the bank. Rajesh Bansal, remember this name? He is the CEO of RBIH, that is Reserve Bank Innovation Hub. He has launched Canara SHG e-Money, a digital self-help group initiative. Now, what is this self-help group? They are nothing but group of members. Mostly these members are women. They have same or similar homogeneous condition, similar livelihood. They save money and they from the savings they lend money to themselves, to the group. And on performing this on a regular basis, they can also go and avail this SHG loan from the banks for their own improvements, for self-employment purpose. For all these purposes, they can go and avail these SHG loans from the banks. So for this purpose, a Canara SHG e-Money has been launched. So When was Canara Bank established? It was established in 1906 and it was nationalized in 1969. The MD and CEO is Satyanarayanan Raju. It's headquartered in Bengaluru and the tagline is Together We Can. Last news for the week. Phonepay and Star Health Insurance partners to offer Star Comprehensive Insurance Policy. Now, we just saw that Phonepay plays a very vital role or important role in UPI transaction, both in terms of volume and value. So it has partnered with Star Health and Allied Insurance Company, one of the largest retail health insurance company in India. It offers health insurance with a monthly. You can offer a monthly or an annual payment option. So the policy name is Star Comprehensive Insurance Policy and you can avail this on Phonepay app and the coverage is up to 1 crore. You can either do monthly payout or annual payout option and you can also have a mandate. So every month you don't have to go and manually pay. You can set a mandate. Suppose like every month 5th this amount has to be sent for this policy purpose. Then every month on 5th this amount will be automatically sent. So this is called as auto pay mandate. And the accidental death and permanent total disablement are covered up to 1 crore. So this is the last news. So I hope you had enjoyed this week's news. Thank you. Let's meet next week. Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Apart from this, you can contact us directly on 9677333862 regarding any courses that we offer or regarding any payment issues. You can contact directly on this number. Thank you.